Moving on to Zoopla and the house price index for November 2025. I was very pleased when I saw in the week that Richard Donald, the exec director of research, shared it online and spoke of a rebound in the market, as I've been saying something similar for the past month or so, after that budget fever really kicked in. It confirms the UK housing market is stubbornly resistant, it prefers to say, to a rapid correction, although deep regional and asset class divergence is setting in. And the budget, while it offers clarity to the political acolytes, doesn't address the fundamental affordability crisis that Zoopla still maintain that we have. But then we've got an affordability of roof over the head crisis, if you want to talk about it, because really the relevant thing is the comparative cost of rent to mortgages. But of course, as I say all the time, when you own a house, you don't just have to pay the mortgage, you've got to pay the insurance, you've got to sort all the stuff out, the maintenance and all the rest of it yourselves. And usually when you own a house, you like to spend money on improvements. So it costs you an awful lot more than paying rent. But anyway, their headline figure shows the average UK house price £270,200 as of October 25, annual rise of 1.3. But under the hood, they talk about a stark bifurcation, regional divergence, as I've said, up 3% in the northwest, 2 or 3% across northern England, Scotland and Wales, flat down south in London, etc. Well, dictated less by the broad economic health, according to Zoopla, and more by unreformed tax policy and, as they've said, affordability constraints. So fiscal drag is a huge problem here, right? These frozen tax thresholds are stopping people from being able to afford more because so many more people being dragged into the higher rate threshold. Well, people are overlooking the entry point problems on the property ladder. You know, flats and maisonettes declining by 1.1% in the year to October 2025, according to Zoopla, the only property type seeing negative annual growth. And it matters because it's what first-time buyers and investors do, generally speaking. I mean, flats are really, really struggling at the moment. Listing prices are pretty static, as I've said, but Zoopla think buckle up for a period of painful stagnation in city centre entry markets, which I would agree with. That looks endless, to be honest with you, because service charges are too high. Developed flats were overpriced in the first place.